So 2025 was a pretty good year for palm oil. Now the question is whether the same thing will happen with 2026. Now if you know our thoughts on the Malaysian market in general, by and large, right, 95% of companies or more are what we consider cyclical companies. And so the nature of cyclical companies is that good years are typically followed by bad years, are typically followed by good years. That is pretty much how it works. Now, it's not always a case where it's a 1-year cycle or sometimes even a 2-year cycles. There are even some industries like properties, there are 10-year cycles, right? But I guess with palm oil, because they are a lot more related to everyday sort of items, and there's always a demand and supply dynamic depend on the market, and it's quite a lot faster to respond. So we do think that the cycle is not going to be like 10 years or even 5 years, right? It can be a lot shorter, in fact. Now 25, we can see a lot of the companies that we follow and are also inside the FIRL Pro boring portfolio, at least, have done really well for palm oil, right? So of course, topping the charts would be United Plantation, probably the best palm oil company in Malaysia, maybe even of all time, right? There are other guys like maybe KLK that is in the shout, but certainly United Plantation is professionally run, a really good dividends, and of course in a good industry, right, for Malaysia. Then you look at a former winner, which is Price. 2-3 years ago they were doing fantastic. They are actually a laggard, compared to the rest, but still a very respectable 18%. And then you have SOP, Sarawak Oil Plants, and then Sarawak Plantation and MHC, all doing close to about some below, some above 30%.
Yep, exactly. And the reason why 2025 was so great is because not only the ASP, which is your CPO prices, is going up, but their CPO volume also is growing. So you can see that CPO volume, this is the number that we track, is basically up 2.5%, whereas for the average selling price, which is the CPO growth, is up 4.53%. This is even faster than the volume growth. So
yeah, because you would think that if the volume grows, that the CPO price would be flat or what, right? Because demand is usually quite constant, right, for palm oil products.
Yeah, which means that either our Malaysia guys is fine, but our Indonesia, which is the competitor, direct competitor, maybe they are not really producing as well. So maybe we managed to get some market share away from them. So yeah, 2025 was great. And if you look at 2026, it was they have a bad start. I mean, palm oil prices or CPO prices is down about 10%. So at peak was around like 4.5 thousand. Right now it's about 4,000, and it has been flat around this price. And we're going to be talking a little bit more on whether this will be the key price level or whether they have a room for growth. So the reason why it's going down is because Q1 or January to March is always a slow year or slow month. The reason why it's low is because there is a lot of festive season. You have Chinese New Year, you have your Hari Raya. Indonesia also is like celebrating Raya, right? And then, multiple seasons, which means most of the workers might not be working during that time. So that's why the production level usually decline, and sometimes there's weather condition that affect them. So that's why Q1 or January to March is usually the time where people anticipate like a very slow production level. And another thing is that soybean, if you actually track against the CPO prices, right, they are actually very down. So if you compare 2025 to 2024,
so just for people's reference, the chart in green is soybeans, and then blue.
Exactly. So soybean is down 7.6%, whereas for CPO it is up 2%. So there is a very stark contrast, and it's quite surprising because usually palm oil and also soybean, sunflower oil, they all move the same, or in parallel. But whereas there is some sort of like a divergence in terms of CPO and also soybean.
And the divergence has happened for over a year, coming up to 2 years now already.
Yes, exactly. And we're going to be talking a little bit about why there is such divergence. So the number one reason is Brazil. They have a massive soy output, which is risking a global glut. So you can see that the global soybean supply is rising at close to its record high. But if you look at palm oil, is pretty much flat over here. So we have been flat since 2022, if my eyeball is correct, if I can see correctly. Whereas for soybean, it's like going up like a hockey stick. So that's why when there is difference in terms of supply growth, right, you naturally see that the ASP for the products also will be different. And another thing is that our major importer, which is China and India, right now they are not really buying as much palm oil as it was like 5 years, 10 years ago. And the only few countries that is buying palm oil, it is coming from the sub-Saharan Africa, ASEAN, and also Middle East. So these are the only 3 countries, not so well to do compared to India and China, but nonetheless, they are still our customers. So where is India and China? What are they buying right now? Is actually they're buying soybean and sunflower oil because it is much more cheaper compared to palm oil. That's why if you look at the statistics from our MPOB, India, Kenya, EU, China, they're all down.
This is one of the best examples of what we call substitute goods, right? So it's like people will switch because I guess people are very price sensitive. I guess there might be certain products where only palm oil works, but by and large, people can just flip around and people don't really care as much.
Exactly, especially for food. Okay, so you can see over here, China and India, why they are buying more soybean is because number one, China is fighting with US right now, and there is some sort of like an agreement where US,
buy X amount,
correct, they force them to buy in India agreement. Whereas for India, is simply because it's cheaper. So even the recent months, like in December, right, they are buying more soy oil and sunflower oil, and they reduce their palm oil by a lot, which tells you that our major buyer is not really buying up. And also which tells us that the demand for such product is actually kind of like stagnant already. So this is the 2026 projections for CPO prices by the few IBs that we have over here and one of the economies, which is MPOB. They're still pretty optimistic, except for Kenanga. Kenanga is around 4,000. And while you can see that MPOB also is kind of slightly less optimistic because they target like 3,800. But in general, they are still pretty bullish. That they say that CPO prices will likely maintain about 4.
But would you say MPOB is like the one we should trust the most? I mean, no shade on the other guys, right? But the other guys are all finance
no,
and
actually,
banking,
even
right?
MPOB also cannot. They get it wrong also. Like previously, they say that it was at this price, but in the end it will be.
So like who in your experience, like who's the most?
Most likely, Kenanga will be the one that is going to be So around 4,000 is where I also think that you're likely to be at this price point, unless there is a shift in terms of the soybean production.
And historically, Kenanga has got it right more often than not.
That one I didn't track whether they got it right or not. But yeah, they have been more conservative and something that I also prefer to be more conservative. So the final thoughts over here is there is a rising in production in palm oil as well. So right now, our MPOB state that Malaysia is expected to hit a record of 20 million tons input. And this has been quite a long time already. Like I think there's been like 5 years or so. Our production output has been around like 19 million tons. Right now, we are already surpassing the high already. And some of the analysts also expect that 2026 is going to be a year that they're going to be exceeding even maybe 20 million or even more. So which means there's more supply. If there's more supply, obviously your prices, your CPO prices will likely to be depressed because of there's more volume. And on top of that, you also have, Brazil, soybean, they are producing a lot, which is making the prices even more attractive. So this is number one reason why we think that the CPO prices will likely remain stagnant or maybe even slightly down. And another thing is that if you look at soybean price, is down 7.6%, whereas for our palm oil is up to 2.17%. So likely it's harder and harder for them to grow further because there is a stark difference already with the substitute. So likely more people will be buying soy oil, or maybe even sunflower oil compared to palm oil. And the next one is Brazil is not slowing down, even though their margins are pretty bad. Some of them even say that they're going to start to lose money because of their production. But if let's say, they come to a point where they are losing more and more money, it might force the Brazilian producers to, decelerate their expansion. So this will be the inflection point if let's say they decided to stop expanding. And lastly, just 2 years ago, we were talking about palm oil and we were quite bullish because there was a undersupply. There's a lot of
we got the industry right, not so much the company.
Right, really. Exactly.
Yeah.
But yeah, we were right during that time. And right now, our projection is saying we are not as bullish as 2025, where there is just, very less supply.
Yeah, there are just areas that these companies can't control that sort of working against them. So
yes, exactly. So likely the plantation company that you see that is going up right now, maybe their growth will be either muted or maybe they'll start to show signs of like a weakness. But if you want to get the best idea, if you want to know our deep thoughts about industry, not only just palm oil, but maybe even AI and other oil and gas, right? For instance, you can check out FIRL Pro because that's where we have, real-time discussion or whatever things that is happening at the moment. We will usually talk to our members in the Telegram and also Facebook group, more into Telegram because, it's easier to chat over there. But yeah, if you have already joined FIRL Pro, those that bought, last week in our last webinar, right, make sure to join the Telegram group if you haven't already. But if you want to know what is FIRL Pro about, is where we share, our best ideas in terms of the Malaysia, global, and also some of the dividend stocks if you are interested in that. And to give you, for example, we covered KGB, Futu, and also Valesto inside our model portfolios of Malaysia, global, and the borrowing portfolio. And Just a spoiler, for global portfolio, we will likely be adding more names soon already. Not only just China, but also the US and maybe even Singapore if let's say we find interesting ideas over there. So if you want to get a taste, you want to see how we do our write-ups, we have a free sample for you. And on top of the 2 write-ups, we also give you 3 management notes because we also do meet management sometimes privately, right? It's not with the analysts because generally speaking, if let's say we have a private meetings with them, they will tend to share more as compared to like a group settings.
And we record that and then we share it with, of course, with their permission, but record that and share it with our members so that people get an edge in the market, right? Because at the end of the day, what we want to find is an analytical edge so we can analyze facts better. And number 2 would be to get better set of facts, right? To get insights into the industry or the company that either it's hard to understand or hard to discover through, let's say, the internet. So if you like to check out what's inside, you can always, click on the free sample link, or you can totally risk-free, sign up for FIRL Pro. It's money back guaranteed within 10 days. If it's not for you, then you can just ask for a refund. And I'll see you next week. Bye-bye.